Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What's good, baby? It's your partners Dale and Cliff back in the saddle again, guys. Forgive me for what's going on, guys. It has been a day, y'all. Everything. Have you ever had one of them days, man, to where Cliff things just go wrong, player? I mean, I don't
Yeah.
just go straight wrong. I don't know what's going on. Stuff ain't working. You just kind of just say, "F it," just "F it." It is what it
Yeah,
is.
man. Especially with a lot of, all the technology we got, something's always gonna break.
All the time, bro. It's just y'all. If you're watching this on Instagram now, which is great, wonderful. If there's any problems, meet us over on a YouTube page. Just go or a Rumble page. Just go into our link and then in the bio, and you'll see both of those pages, guys. I'm sorry, guys. It ain't my fault. As Mr. Richard say, it ain't my fault. It ain't my fault. So it is what it is, guys. Welcome to the Real Estate Live Friday, guys. We have to get in and get out, y'all, because we have a meeting at 6 p.m. with the Cash Flow Club members, guys. Man, this is gonna be good. Thank you for you guys that actually was patient, brother. Man, Clifton, how's week, man? How was week, man, for you? How was it? Was it pretty good?
Man, good week, Can't complain, man. So it's in the strong, looking good for next week.
Good stuff, man. I gotta ask the question: did we get the bag?
Yeah, man. We always doing that.
We got the bag, y'all. No matter what going on, guys, we gotta make sure we get that bag, y'all. And y'all, I got some news for y'all as well today, guys. And forgive me, guys. I am sending out some text messages to everybody because again we had a little glitch. It's all good, no thing, guys. We in this thing. We still a little better than you anyway. But the exact same time, guys, man, I'm signing some closing documents today, Cliff. We signed some closing documents.
Well, on new construction, right?
New construction, baby. Yes, sir, man. New construction. After the Cash Flow Club meeting, which is our VIP meeting, guys, for everyone that wants to join the Cash Flow Club. This is when you get one-on-one time with me and Cliff on a monthly basis. And today, guys, we're going over how to locate distressed properties. And we're going in on this one, guys. But yeah, this is going to be this is for new construction, big dog, SFR. SFR. So guys, we out here closing transactions. And Cliff, man, I got a good rate too, man. Good rate too, man.
Oh, for real?
Good rate too,
Okay.
man. Good rate, man. Because it's me. It's me. But anyways, it's me. But anyways, guys, let's dive into this real fast, guys. Let's go into this thing, a current market analysis, guys. Yo, Cliff, man, bro. I want to talk about something that we mentioned last week. And this was Opendoor Technologies, guys. Cliff brought this up to my attention, guys. This is Opendoor Technologies. You may say, who is this company? Cliff, if you could tell the folk in the back row, who is Opendoor and what do they do?
Yeah, Opendoor is basically they flip properties, but they do it with very low profits. right? So you probably heard of them, right? They bid on your house. They're willing to buy your house, and what they do is once they do it, they fix it up, resell it.
Exactly. Now, Cliff, they are a public traded company, right?
Yep. Hmm.
So that means they're playing with folks' retirement accounts, right?
Man, billions.
Billions. So that's what the B, not the M, right?
Right. Yep.
Okay. So watch this now. Uh, this is not good. What we see on the screen, is it?
No.
This is not good. What story is this telling everyone that has a retirement account, an IRA, or funds actively invested in the market, specifically with this company?
The market is frozen. There's almost no opportunities right now. Uh, and all these companies who were bidding based off these, this AI kind of stuff, right? Using models and all this, they losing a lot of money. You can see right there, I don't know, several billion in a day. Probably at least, something close to it. It's crazy.
Wow. So several billion in a day. And let me ask this question again. If it's a dumb question, Cliff, don't shout me down, baby. If are they investing their money or your money?
No, that's capital they raise. They invest in the investors' money.
Oh, and who are the investors again, Cliff?
Oh man, they probably got pension funds. They
Oh,
probably got you know private equity. A
oh,
little bit of everything.
everything. So let me get this straight. Most guys, 401ks, retirement accounts, all right? They're invested in a fund and then another fund and then another fund and another fund. And that's how these funds or these resources get into the pockets of Opendoor technology. So I want you guys to take a quick look at this. This ain't good at all. And most retirement account investors don't know what the hell they're invested in. Am I right, Cliff?
Oh no, I mean it's too much stuff. Most people just say, okay, you an investment firm, cool, and they go with that.
Mm. So people they don't know what they're invested in. You don't know what type of rate of return you're getting, right? At all, because you have someone else managing your resources. Is that right?
Right.
So for those that are kind of like what's going on here, guys. Let me just say this here, guys. This could probably be you too. This is probably you. How do you know? I don't know how you can know, because most investors who have retirement accounts have no clue what they're invested in at all. And this company here, which is really a hedge fund type of company, they're not investing their money, they're investing your money. So you may want to look at what your retirement is invested in. Most of the time, your retirement is invested into multiple different funds. My question to you is, do you know what funds that your funds are invested in, and what true rate of return that you are receiving from these investments? If the answer is no, I feel sorry for you. Now, Cliff, this is not the only company doing this, right?
No.
Okay. What other companies are doing this?
Well, so Zillow was doing it. Theirs got shut down after they lost several billions of dollars
Okay.
trying to do it, right?
Okay.
Redfin, they shut theirs down too.
Okay.
Uh, there's a couple other ones, man. I can't remember right now. A couple, man. No, none of them. The entire model did not work.
And what was their model? What's the model? What's their model?
They tried to make fix and flipping an enterprise. They tried to make it a multi-billion-dollar company, fix and flipping.
So, Cliff, let me ask you this dumb question: has this ever happened before? Has anyone successfully set up a huge Fortune 1000 operation for buying and flipping?
No. Mm-mm.
But your advisor told you to invest in this firm, most likely. Matter of fact, he probably didn't tell you. You probably signed something that actually said you give him the right to invest in funds for you. So now what? Now, Cliff, Based on this, man, if you guys let's see what else is going on. They said the only thing that's going on, guys. There's another company clip that was going on here. Is this here another company? Let's go over here real quickly here, man, and look at another firm that people may know. Cliff, I think you know this company too as well. You may know them very well, Cliff. It starts with a B. It starts with a B. You heard of a company called BlackRock?
Oh yeah, that's a huge company, probably one of the biggest companies in the world.
Okay, now guys, new flash, you guys. BlackRock guys, they're canceling contracts. Yep. Mm-hmm. Yeah. Now, Cliff, what was before we go in this? Let's go and listen to what he got to say, and then we'll unpack their business model too. Here we go.
In a dramatic shift, Wall Street real estate investors are no longer buying homes in the US housing market, with new data from Redfin showing a massive 45% contraction.
Huh? Yeah, Cliff, that's not good, is it?
No.
Okay, let's keep going for the folk in the back row. Here we go.
In investor purchases over the last year. That's the biggest decline since 2008, particularly in cities like Charlotte, where the purchases are down 60% year over year, Atlanta, where they're down 64%, and Las Vegas, where they're down by a massive 65% and are now basically lower than they were back in 2017. And ultimately, this is good news for you guys out there as regular home buyers. It means you're facing less competition from big Wall Street investors, because it simply doesn't make sense for investors to buy real estate in the 2023 housing market due to a combination of rising interest rates, increasing rental vacancies, as well as declining rents in certain markets.
Stop right there. Cliff, play on. If you could, for the folk in the back row, guys, let me bring Cliff back on thing real fast. Cliff, for the folk in the back row, what is BlackRock's business model in real estate?
BlackRock's buying a lot of rentals. And they also, another one is they buy mortgages. So if you get an investment property, I bet you 9 out of 10 times BlackRock bought that mortgage.
So wait a minute. You mentioned a word that's not going too well. Mortgage. Is that right?
Yeah.
Mortgage. So what type of mortgages are they either funding or buying?
So they buy what they call it DSCR loans. Basically, it's loans based off the rental rate of the property.
We got a problem. We just saw what's declining, Cliff?
Investment properties.
And investment properties, those long-term holds, what do they pay?
Cash flow.
Which is in the form of what? Rents, right?
Right. Yeah, in rent.
Did he just say that the rents is declining? Didn't he also say that they're increasing vacancies? So just like Opendoor Technologies, is BlackRock doing the same thing a little bit?
Oh yeah, all day.
I'm just saying, guys, this is a reality. This is reality. Cliff, did we not say this was going to happen?
Yeah.
That's what we said was going to happen, guys. It is what it is. But anyways, guys, I digress. Cliff, man, in your opinion, man, what's going on with the economy? What's going on with the economy? Talk to people.
Oh man, everything's slow. The entire real estate market is frozen, right? So with the high interest rates, nobody can really get into a property. Nobody's selling their properties.
That's correct.
So now the Fed said that looks like they're gonna pause. I think they're gonna pause for a while, right? I think they're gonna cut rates. Even the CEO of BlackRock said he thinks they're gonna cut rates next year, into next year.
Oh wow!
They have to.
So you still believe that they're going to cut the rates?
They have to. They don't have a choice.
Why do they have to?
So rates are based on what the government is willing to pay to people who own bonds.
Okay.
Right? They buy treasuries.
Yeah.
So the higher the rates, the higher we pay an interest on those treasury bonds.
Sure.
Right? So you got to stay with me, right? So if we're paying 5%, 6%
Yeah.
because the Fed is raising them, who's getting drained? Dale, who's losing money if rates stay high?
Well, if it's costing more money to borrow the debt, well, the government's losing money because of the fact that, well, the government's losing money.
Right. Exactly. Everybody saying, yeah, keep them high. If you rich, shoot, let me go buy some bonds at 5-6% all day. Right? So if they keep them high, the government is paying high interest.
Mm.
And we already know we in debt. We already know we got debt.
Yep.
We can't afford it. We just can't afford it. So we gotta cut just so the government can save face.
So okay. Now watch this now. Now, what you just said, guy, what you just said, Cliff. Okay, I'm hearing what you're saying. Here's my counter to that, right? You're saying that the bonds right now are generating a high yield, right? 4 or
Right.
5%. And that is what the federal government, well, I'm saying the Fed, is paying out in bonds to investors. Here's my question to you: is if they cut the rates, right? They cut. And I'm using an example. Let's say 100,000 investors bought 10 million, $1 million worth of bonds, paying at 5% rate, right? All of a sudden now, the Fed then cuts it from 5% down to 3%. You got a problem now. Because now you have investors that bought it at 5% are now underwater. You're in the same situation that SVB was in. But now, instead of it being centralized at a local bank, it is now at the Fed. So you just made the Silicon Valley Bank situation a lot bigger, right? Now
Yep.
it's not
Mm-hmm.
one bank; it is the entire economy. So if you cut the rates, now what? And that happens. Now what's your move?
Nah, if they cut rates, the bond becomes uh more profitable.
So if what you're saying is correct, you are banking on this here. You're banking on banking on a house of cards. You're banking on more investors to flood the market to bridge that gap to where the sheer volume bridges the gap of the 5% investor and the new 3% investor, so that that new volume can kind of suck up that arbitrage there because you can infuse more capital into it. That's your play.
Yeah, I mean it's part of it. So you always need new investors. That's period. No matter what you do, they need more people in the
I'm
market.
rocking with you.
But everybody who's buying 5 right now, so if you it's basically supply and demand, right? If you're buying if you got a 5% bond on a 30-year, and then you cut rates to 3,
Mhm.
my bond becomes more profitable.
I'm hearing what you're saying. Here's my counter to that though: is yes, your bond becomes more profitable, but
Mhm.
why would I buy your 5% bond if I can get it for 3%?
Good. That's what I'm saying. Because the 5% bonds yielding 5%, the 3% bonds yielding 3. So you want my 5%.
So
You know what I'm saying? You want my bond.
so what you're saying is now I see what you're saying. So what you're saying is you're saying is yes, if they cut the rates, what happens is my 5% bond becomes more valuable, right?
Right, right.
So if that's the case, why did SVB not do what not do what you're prescribing the federal government's going to do? That was the situation.
Because it's their situation was the reverse. They bought in at like 3%, 4%, and then it went higher.
Gotcha.
So it became less valuable.
Gotcha. Okay.
Why would anybody buy SVB's bonds at 3
That
when the
makes sense.
market's got 5?
That makes sense. Now that makes sense. Okay. Now it makes sense. So guys, we're walking through it. We're gonna see how that actually goes. But
And
mhm.
think about that. It's like you just said. SVB, all these other banks, they're still holding those 3% bonds.
Yeah.
They're underwater. All these banks are still underwater. So the Fed has to bring it back, or else those banks were going to. What's going to happen to all those bonds? They're worthless. They can't sell them.
Ooh, here's my thing though. Now, and that makes total sense what you just said. Now you have a different reality though, because those same investors right now, what's happening is this here is now they have less arbitrage of income now because they had to manufacture a pay raise, right? Of their credit card debt. So now you have a different type of investor now who has less to play with, if not any. Make sense? So my question is they cut the rates with the hopes of the American people going out and spending more money. Do they have the money to spend?
Right now, no. Everything's getting soaked up.
And also now by doing that, now you have a threat of deflation now. Because of the fact that if the market doesn't respond how you want to respond, uh-oh.
Man, I think what's going to happen is they're going to cut rates,
Okay.
and that's going to spur another uptick in GDP because the real estate market has so much locked up equity.
Yeah.
It's got trillions of locked up equity.
It does.
Nobody can touch it till the market starts selling again.
I'm rocking with you, but here's my question to you though. Can that average buyer afford a new house now? Because everything costs so much more now, not just the rates. We're talking about food. We're talking about gas. Everything is so much higher now. Can they afford that?
The average buyer probably can't afford anything more. But what's happening right now is wages are increasing.
Huh?
So they're trying to catch up. That's why you see all the auto workers, everybody striking, because their wages are not matching the inflation rate.
But
so now everybody wants more money, right?
Yeah, they do.
Which is going to continue to just cause prices to go up.
Yeah. So now this is called the cricket cycle. I'm glad we got here.
Right. Yeah.
So now what's happening now is yes, the Fed cut the rates, but the problem is everything else costs a lot more money: gas, food. Pick something. And what the American people have to do, they have to change behaviors, number one, and they have to also borrow more credit card debt. So now they owe $1 trillion more in credit card debt, and they're barely making it. What other money can they spend? That is
they can ask for a raise.
But then
that's it.
But then what happens is there's a problem with the raise as well, is because now you're dealing with the PPI, producer price index. Now it's costing more money for the producers to produce it. So what they're doing is they're passing that cost on to the what? Consumer. So the same consumer who was footing the bill, they can't afford to pay a higher cost at all. They can't do it. So my question is, where is the money going to come from, even if the Fed cuts the rates? Where's it going to come from?
It's going to come from it's going to come from the equity.
So what you're saying is there's so much equity in real estate that is going to bridge the gap completely.
It's going to do just to give you an idea, the average home from 2017, 2016
Okay.
to today has doubled.
Okay.
That's a lot of equity per home. That's hundreds of thousands of dollars per home. So guarantee you a lot of people will be selling their property. How do I know this? I'm looking at it. I'm seeing the results when I can go look up and see. So for example, I had several appraisals I'm seeing at closing. They're walking with hundreds of thousands of dollars, Dale. Average people, $100,000. Now imagine when rates drop and people are buying in the market again. All that equity.
I'm hearing you.
It's coming.
I'm rocking with you. I see it as well. No problem with it at all. My question is, can the consumer? Who's this? Can the consumer can they afford a higher price point now? Because again, yes, they're making hundreds of thousands of dollars as well, but everything else costs more.
Right. Yep.
It costs more.
That's why the lower. So what's going to end up happening is it's going to be the Fed mess with the market. So let me break it down. Let me break it down a little bit, right? So let me ask you a question, right? So right now they're high. You got two problems: price
Yeah.
is high, interest rate high.
Okay.
What happens when interest rates drop?
Okay. I'm rocking with you.
What's going to end up happening is you're going to have more inventory hit the market.
Yes.
No, right? Because people say, "Hey, I can sell my house," but at the same time, you're going to have demand come and meet that market. So you're going to have a slip in prices, and that slip is going to hit demand, and then demand's going to drive the prices higher.
I'm hearing you. What you're saying is I'm agreeing with you 100%. My question is, we live in a data nation with everything else so much higher, and people manufacturing a pay raise for a bit, borrowing credit card debt, and everything else is a lot more higher. My question is this here is, can that consumer afford that payment?
If the interest rates are lower, yes.
Mm. This is going to be very interesting to see what actually happens.
Mm.
Very interesting to see what happens because I don't think, here's another thing is I don't think they can cut the rates because one partner, I would say, is not going to do something that needs to stop doing. That is printing.
Oh, you're talking about spending the money.
You see it.
Oh yeah,
You see it.
you ain't lying.
You see it with the United Auto Workers. These dudes are asking for a 40% pay raise and a 32-hour workday. Huh? Like, where's it going to come from? Knowing that Ford and these other manufacturers of the big three were forced to build more EVs, and EVs, electronic vehicles, and they're not even really selling. They're not. It's going to be very interesting to see what actually happens because if Congress does not stop printing it all, man, we're in trouble.
Oh yeah, there's no
Trouble.
doubt.
Trouble. Man, guys, we dove into that thing, man. Guys, Cliff, real fast, man. What type of deals you think are coming, brother?
Man, it's gonna be. I think you're gonna find any deals you see on the table is less competition. This is probably the lowest competition you're gonna see in the next 5-10 years.
Gotcha. I'm rocking with you. I agree. There's going to be more sub-2 deals. It's going to be more buying whole portfolio deals. It's going to be more new construction deals. It's going to be a lot more JV opportunities as well. It's going to be a lot of deals coming on, and those that actually get in the game now, before that shift actually happens, it's going to be something. The next 2 or 3 years are going to be very difficult for some people. Very difficult, unless you have the right game plan. All right, guys, man, that's what we have for today, guys. Real quick, guys, we have to get ready for the Cash Flow Club meeting here in a second, guys. Those are in the Cash Flow Club, guys. It is happening today, which is the 29th, guys, at 6 p.m. All right, today at 6 p.m., guys. We are doing the Cash Flow Club. Not that should be Friday. My bad, guys. It's been a day, guys. Don't shout me down, y'all. I'm sorry, but let's see, Friday. All right, here we go. We gonna correct it on the Friday. So Friday, guys, today at 6 p.m. It's gonna be the Cash Flow Club. You got an invitation via email. You have it. Those that actually receive it, check your spam. Okay, check your spam as well, and you'll see that link in there as well, guys. So we look forward to seeing you guys there. We're gonna be walking through how to locate distressed properties. We're gonna really focus on 3 points there, guys. We're gonna go into this thing real quickly, and also, guys. Hey, next Saturday at 12 noon CST, guys. The Real Estate Masterclass is on and popping, guys. You can find the link in my bio, guys, and we're going to begin marketing this. It goes live tomorrow. When it comes to as far as marketing. So if you want to get in to this, we're going to walk through joint venture investing, new construction, fix and flip, buying whole, put together scope of work. There's no questions off limits, guys. No matter what platform you're on, go to link in my bio, guys, real quickly, which would be great. But But the exact same time, I may do another special live as well, guys. Kind of talk about it and get people a chance to scan the QR code as well. It's gonna be tight, guys. It's gonna be really tight. Cliff, man, how was the last one we did, brother?
Oh, last one was good. We had some good questions. We went over a lot of different things, man. Yeah, it was real good.
It was good, guys. Well, man, that's all we have for today, man. Cliff, guys, that's all we had. We have to get ready for the Cash Flow Club meeting. We look forward to seeing the members there, man. We're gonna have a lot of fun, going deep in depth, guys. Hey, those in the Cash Flow Club, bring your questions. You're gonna get a lot more substance than what we do here, guys. But guys, thank you so much for your time. God bless you. Know we end it every time before you leave while you can, guys. You see that thing, guys. Take that damn picture and give it to your mom and them, guys. See you next week. Holla at your partners. Peace.
God, give thanks. Whoa. Bless God, give thanks. Bless God, give thanks. Whoa. Bless God, give thanks. Whoa. Big God, big grace. Whoa.